One of the main PFM concepts used in the Citizen's Guide is the National Chart of Accounts, or NCOA for short. If you are working on PFM, you must understand the NCOA, its uses, and how it promotes fiscal transparency and accountability. Let's get started. The National Chart of Accounts was developed by a technical subcommittee set up by the Federation Accounts Allocation Committee, or FAC for short. The FAC Technical Subcommittee, in collaboration with federal, state, and local government, provided the roadmap for implementation of the International Public Sector Accounting Standard by the three tiers of government in Nigeria, which includes a comprehensive and standardized National Chart of Account, format for preparation of cash and accrual-based accounting. The National Chart of Account was ultimately launched in 2012. The National Chart of Account has harmonized the Chart of Account of federal, state, and local government to a standardized set of coding that will enhance the attainment of the minimum reporting requirements that are in line with international best practices. Although the National Chart of Account was launched in 2012, it has taken several years for the subnational government, that is states, to adopt the coding. The NCOA provides the platform for budgeting, accounting, and reporting of all government financial transactions, particularly the dimensions by which the budget can be prepared and analyzed, and the systematic list of accounts an entity uses to define each class for which money or equivalent is spent or received. That is why it is referred to as a complete list of budget and accounting items, where each item is uniquely represented by a code and grouped into tables of related data for ease of tracking. The key features of NCOA are: it is expandable, flexible, and adaptable. Each item has a unique code. It is used for both budgeting and accounting. It follows the classification of functions of government, COFOG, as provided in the IMF's Government Financial Statistics. It also follows the RAY model of economic classification, which stands for revenue, expenditure, assets, and liabilities. So what are the objectives and benefits of the NCOA? Firstly, to foster the unification and harmonization of the coding, budgeting, and accounting and reporting systems. Secondly, to facilitate the global interpretation of Nigeria's general purpose financial statement. Then, to facilitate nationally consistent financial reporting and to enable whole government financial statement to be produced. To facilitate easier computerization of the accounting system. The NCOA improves efficiency, transparency, accountability, and comprehensiveness of resource allocation and management of state government operation. It can facilitate easier comparison across government, MDAs, sectors, and others. And finally, it makes it easier to generate financial reports. The NCOA has 6 segments. This can be thought of as dimensions of analysis. The segments are administrative, economic, function, fund, geolocation, and program. Every revenue transaction should be coded to 3 of the 6 segments, these being administrative, economic, and fund, while expenditure transactions are expected to be coded to all 6 segments. Over the next 4 videos, we will discuss each of the 6 segments of the National Chart of Account in more detail.